All right, guys, how y'all doing today? So we're looking at Bitcoin, BTC USD. I'm on a daily chart. All right, so we want to look at something first before we get started. I want you to notice at 6:15 it was 435,206 traders that were liquidated, and it was at 2.08 billion dollars. All right, so right now we're at 436,365 traders. All right, that has been liquidated, and it's at 2.09 billion, and it is 6:33 p.m. All right, so roughly almost a little over about 18 minutes or so um, that we've seen that big jump. All right, now let's get to it. We're looking at a pattern that happened back in 2021, 2022. You see we're right here where this pattern happened. And this is what it essentially looks like. Okay, so this is what we see. We break down and we start trending down a little bit, right? All right, so we got the same thing that's sort of showing up right over here where we look like we mimicking that particular pattern. Right? And classic double top over here as well. We could consider this a triple. All right, but we got an impulse down. We get the impulse down, and then of course we start trending down. All right, so what I'm gonna do is I'm gonna go over and look at some fib levels. Okay, we're gonna play the fib levels, and we're gonna do it where you can see where we currently are. All right, so we're gonna come from this low over here, and then we're gonna measure this one over here. All right, you see how they look similar, right? You see the structure? It looks similar. All right, so I'm gonna take my Fibonacci retracement tool, take from the bottom here, and we're gonna go all the way up here to the top. I'm stopping right here. All right, and you see how we come down. Now we don't get all the way to the 50%, but we get close. Okay, so that's just based off that. Now that I have that, we want to do the same from here to here. Right? And we want to see where we currently are. All right. The other one was getting close to the what? 50%. Here's 50%. It's at 44,396. Now, I'm not trying to say that we gotta go to the 50% or get close to 50%. But what I do want to highlight is that typically the 38% is visited. It gets visited. Once that 23 gets violated, it comes to the 38% retracement. So at bare minimum, we could expect a $57,114 Bitcoin. Like without all the rah-rah that we could get here. Okay? If we violate this area, then we do have a clear path to where we still could go to the 44 region or the 45 region, somewhere there. I feel confident that if we can keep price above the 50, somewhere in this area, we should be good. Now, if we start breaking on down and coming down here to the 61, that's going to be a lot. Okay, can it happen? Yes, it's crypto. Anything can happen. Okay. So we got those levels and what it looks like. All right. Now, this was an impulse that we had that was pushing to the downside. Right. We're gonna measure that. We're gonna see how that play out. All right. So we hit target one based off this impulse. Hit target one. We almost was getting to two, but we didn't. So what I'm gonna do, I'm gonna readjust this to where I can get a better impulse. So instead of measuring this impulse, we're gonna go all the way down to this one. We're gonna see we might not reach if we go that far. Let's try this one. Yeah. Let's see, we barely get to that. So yeah, we'll stay with measuring this. The reason why, because we gotta measure this. So let's measure this impulse. And this is what we're looking at. Alright, so we're gonna hit one, and it looked like it's shaping up, right? So if we do hit number two, it's out of 52,000, whatever. But remember, we want to, if we can stay within this range, I think we'll be good to go. Okay, so that'll be fine, right? But it's still not off the table. 52,796 or whatever Bitcoin could be hit. All right. Now, if you take it from here all the way to here, most of our field levels are being met. And I want to say I think the 78 is next. All right. So based off of where we are right now, we got 61,000 Bitcoin. That's look like it's going to be visited today, later this, in the morning, on the 6th. But that looks like this could be reached. All right. Now let's look at what's happening. The liquidation. Let's go up to the 24-hour, and what do you notice? We got 87% of the long. That's too many people long. All right. We're on a daily candle. This is a daily candle. Let's go so you can really see. It's a daily candle, right? So on that daily candle, 87% of long. That means that their liquidity. So we do need to start seeing this change. Right? We need to see this reduction. So for instance, if I come back in a couple hours and it's at 83%, that means that now people are starting to go short. All right, so let's look at the hour. So this have changed. I came here earlier, and this was actually 63% short. So it just switched. Right, so 63% was short, and Bitcoin was rallying a little bit. So let's go back to the 30-minute. Yeah. So this is what it was doing. It was 63% short around this time, and you see how price was going against it. Those shorts were starting to get ate up, but then it drastically switched to, see, 52% now, a long. Right. So majority starting to get long, and now it's starting to liquidate them. All right. So we can use sentiment to start gauging, right? But I prefer, if we're going to use long term, we need to be looking at, the 24-hour. I want to see what these levels are like, how they're changing. Right. So I want to keep an eye on that to determine which direction is very strong on the higher time frame. And then since we've been doing this video, you see that we keep rising. Now we got 437,819 traders were liquidated, and it just keeps growing. Which brings me to get out of. Bitcoin is dropping. Bitcoin is not dropping. The dollar is just getting stronger. It is what it is. It still takes you over $63,000 to buy one Bitcoin. That means your dollar is weak as well. But temporarily, this is just the strength of the dollar. Some people are taking profits. I mean, let's go back on the higher time frame. Put it in your head. Why are you mad because somebody who bought down here, sold up here? And just a lot of people are selling. And right now, it's more people selling than they're buying. And then you have the big players who understand the derivative market, because if there is what, $2 billion worth, that means someone's collecting that. And so when these big boys are shorting, eventually they're gonna have to buy back because they borrowed and they borrowed at a high price. They got to buy back those shares. So if I borrow, I'm just gonna use simple math, $100,000 Bitcoin. I borrowed 5 Bitcoins. That means I got $500,000 worth. And I immediately sell them. And I got $500,000 sitting in my account. Remember, I got to buy back the 5 Bitcoins. So right now, Bitcoin is at 63,395. We're just gonna lock that price in. What is 63,000? What I said, 395 times 5 is 316,975. Let me write that down for you so you can see. So let's do this. Shorted 5 Bitcoins at 100K. That immediately gives me 500K. Bought back at 63. $395. Cost. $316,975. So I bought back. Remember, you got the cash, the 500,000. Your profit. And we're not worried about no fees. This is for demonstration. Your profit is $183,025. This is when somebody shorts. Okay? So right here, around 100,000 some change. Now somebody said, "Hey, I want a short." Even right here, I want a short. Right? Let's just put a line right there so you can see. It's not gonna be perfect with 100,000, but just for demonstration purposes, somebody right here decided they was gonna short Bitcoin, right? And as prices come down here, they're now going to buy back their Bitcoin. Now, imagine a whole lot of people doing that. Eventually, everybody who's short of it, they gotta buy back, and this is where we get these little rallies. These little rallies back. This is people buying back what was shorted, right? And then what continues to keep it on is that retail now comes back in and start buying. So keep that in mind when you understand a derivative market. Someone is making money on this. So yes, you're gonna feel bad because you sat up here and bought all these highs up here. You just threw everything in because you was afraid that the market was gonna leave you. So you don't understand market dynamics. If anything, not financial advice, if you were going to buy anything, yes, you start here and lower. But y'all know I use a times two strategy that if I'm introduced to a new asset, wherever the price is where I find it in the market, I multiply it times two, and then I do a dollar cost average it anything below that. So if I find something at $1, I multiply it times two, it goes $2. What does that mean? I'm gonna forever try to buy that asset as long as it's below $2. And if an asset I really like, I quadruple it. I'm like, if it stay below $4, I'm buying. So guess what? If for whatever reason, if I just found Bitcoin, I love it. It's at 100. I'm just gonna use simple math again. If it's at 100,000 flat, all right. I'm forever buying Bitcoin weekly, monthly, until it reaches $200,000. Take all the guesswork out. So that's why I'm not tripping, because on a lot of some of the altcoins I am investing in, I already times two once I found it, and it's below that, so it doesn't matter. So I'm continuing each week, load it on it, keep it moving. Well, yeah. So that's that, guys. I believe that we still got a little bit more downside pressure. Derivative market is very locked in on this. Right. And so we really got to keep that in mind. All right, let's look at this liquidation map. There's some key areas we need to look at. All right, so if we keep the shorts, if the shorts pile in, they are going to be in a rude awakening. So if we have some form of recovery on up, all right, we're going to start seeing some heavy liquidations come in. As you can see, you got 600 million, 700 million. Even if we get back up here to even over 70,000, got over $1 billion worth of liquidation from shorts. So people who short it, all right, they'll get ate up on that, right? So that is liquidity. So remember, we're talking about those guys who short, they got to buy back. All right. Well, so they're not. I mean, they're not part of this because they're buying back. But you got the other people who are betting that it's going to continue going down. And so somebody can take the other side of the trade and push this thing up, which means they have to close out. Because remember, the other side of shorting is you still got to buy back at a higher price. If it goes in the opposite direction, you got to close out. So you can have you're capped. You're capped. You can have unlimited losses going to the upside. So you gotta be careful of this. All right. We go back. We see we still dropping down to 60, 62. So we're in a free fall. And you got a lot of people who are piling in and thinking that this thing gonna bounce for right now. And I think it probably will, but we're still going. It's a nice drop, but I love this. This is because we now get to play a fib strategy, all right, where these levels can be revisited. And I love the fact that 71,000 is prime, because 71,000 is $1 billion worth. $1 billion of worth up here. If that price snaps back up here, I would take that. Now it's just not time to be looking to go long yet, but a recovery can happen. Okay, well, we've seen plenty of times where we have had a sharp move down, like right here. We had a sharp move down and we recovered. Right, we had a sharp move, and I only like to go to the 50% on those sharp moves. All right, look at this sharp move, 11.8 in the trade, stop loss below, get out at 50, bam, 50, boom. Now imagine if it was back here, $1 billion worth sitting here, worth of shorts. Is everybody betting on the downside, but the whales come in, push price up. All those people betting on the downside, they got to come back in. They got to close that order out. All right. So we clearly continue to see that we have We have opportunities where you have these nice little sharp moves to the down. Remember, I like to just go to the what? 50. Price cross 11, stop loss below, 50%, bam, out of the trade. So same thing, set it up like over here, right? What happens is people look at stuff like this and they think that, oh, this is gonna happen forever. Nah, this is prime. This is priming for a correction. Okay, it's not gonna last forever. This needs a correction. This had a correction. See this drop right here? Start from right here. Bam. Who we say we want to go to? The 50. Even though it went higher, but it ain't the strategy. It's go to the 50 out of the trade. This is trading at this point. Now, some of you want to, you're looking at long-term investments. It's totally different. But at least you can understand this. It's like, hey, maybe there's a great area to get back in and trade or whatnot. Right? You can use this on any instrument. It doesn't matter. SPY, AQ, whatever. Altcoins, stat. Okay. Drop. Cover. Impulse. Same thing. See it all over. What happens is, this fools people. I feel like this is going to happen forever. Pain hits different. This doesn't feel good. You look at your portfolio, you're like, oh my God, it's just bad, terrible. All right. So like I said, pay attention to this. Look at these liquidations. Look what's happening. Look where the money is. Market wants to go there. And then we can go. You can look over the next 7 days. You see the same thing. Look at it. Look at all this. It's billions of shorts. All these billions, 2 billion, 3, 2.58 billion if it get back up to 78,000. Like, I mean, where would that be? 78. Back up here, like in this area, like there's a magnet. Anybody who knows supply and demand levels, here you go. That was supply level. All right, take you from the top. It got engulfed, fell out. This is a supply area. All right, that's that. Y'all have a great one. It's your bro E-White. I'm out.